We apologize for that delay. Good morning, everyone. Welcome to a new week of doing business. 55 minutes we have each day to do current and relevant business conversation. I'm Ini John McCann. We start as usual with what's going on in the global oil space. As we know, it's been a very volatile season for global oil prices, and today we saw that price increase as Yemen's Iran-backed Houthis, they started over the weekend, joined in this fight in support of Iran, and so that is why we have seen a huge movement in the price of Brent. For instance, it's gone 3.14% in the green, $116.11 a barrel. For WTI, it's gone above $100, and this is in spite of efforts by the United States, especially the United States President, to calm nerves there. They've had to suspend sanctions on Iran, Iranian oil and oil to boost supply in the country. But in spite of that, sentiment is still very negative at this time, and so we see that WTI, which normally would be below $100, is $101.82 a barrel, went up 2.14%. President Donald Trump reportedly said he wants to take Iran's crude, deepening concerns over escalating risks to Middle East energy flows. International benchmark Brent crude futures with May delivery ended 3.14% higher at 116. In an interview, President Trump said that his preferred option in Iran would be to take the oil. Of course, we know Iran would not fold their arms and wait for the President of the United States to take their oil, likening it to U.S. actions in Venezuela. But we all know Venezuela is not Iran, where Washington effectively gained control over the country's oil sector after the capture of his leader. And away from oil now, let's see how the market fared last week at the close of trade in Nigeria. We did see that it was at the close of trade a negative close for the NGX. So we see that the oil share dropped 0.12%, the equities cap at 128,969 at the close of trade. Let's see the major movers of the market. The volume and value dropped compared to the previous week. However, deals we see hit 359,642 at the close of trade last week. Let's see the stocks that really moved all of that. Banking in the red, consumer goods in the red, industrial goods in the red, insurance and oil and gas were the major positive stocks at the close of trade. But we did see, we lost the 200,000 level at some point. We regained it, and then I guess we lost it again at the close of trade last week. But it's nothing compared to what's going on out there. It's not just a Nigerian thing. In the midst of the geopolitics and geopolitical conflict that's still going on in the Middle East, we've seen a lot of markets or investor sentiments really negative about that. It's not reflecting so much in Nigeria's equities market. Of course, it's affecting us more in the oil and gas. But we see top trades for last week. Wema Bank, Access Holdings, and United Bank for Africa. They were the top trades and top gainers. Zikis has, remained on the mind of a lot of investors after the suspension on its trade. Is about 2 weeks now or 3 since the suspension of it on its trading was lifted. So last week we saw they gained more than 60%. Premier Paint also has been making a lot of positive moves, and as well as John Holt. 3 of them were the top gainers. And for the flip side, Livestock Feeds PLC, Fitson Healthcare, and Cadbury Nigeria PLC, they were the ones who experienced the most of profit taking and lost some of their share price at the close of trade. We're still looking at the markets. Let's see other markets at this time. For instance, the fixed income market, if we could see how that market fared at the close of trade last week, talking about the federal government bond market, the treasury bills, as well as the money market. So this is the treasury bills. We saw the 91-day treasury bill, the rate was at 15.95, the 182-day. We saw a little bit of reduction from it, from 16.42 to 16.65. 364-day also saw a little bit of drop on its rate. Open market operations, that's OMO, the short-dated 8-day was at 21.90%, while the long-dated was at 19.79%. I believe we have other markets. Also, the federal government bond, we saw that the market experienced a mix of bearish pressure and selective buying interest, largely dictated by shifting geopolitical headlines and domestic liquidity. Earlier in the week, selling pressure intensified around the mid-end. And there you have it, the savings bond at 12.90% and 13.90%, while the benchmark bonds yield for the federal government bond 2031 and 2033 papers hovered around 16.70 and 16.90. And a lot of investors obviously still looking out there as what's going on in the geopolitical area, comparing it to domestic liquidity. And also we saw how the Naira performed. Tomorrow is the last day in the month, and the last day in the first quarter also. But at least let's just see for what happened last week. Expectedly, I guess I should say, almost 2% down is what we see the Naira losing in 1 week. On the NFM, it's opened at 1,384 Naira 25, but closed at 1,389 Naira, losing 1.90. And it's important to note that there was an intervention by the central bank on Friday, and on Friday the market actually, or the Naira actually gained, I think again about 2 Naira. But that was not enough, to cover up for the loss it made all through the week. So imagine without the CBN intervention on Friday, the numbers wouldn't have looked good at all. But, well, that's what is going on. And guess what? Tomorrow is not just the final day in the month and the quarter, it's also the deadline for the bank's recap. And the CPPE has been talking about it, reconnecting Nigeria's banking system to the real world. It is recommending, or the director, the CEO of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, is recommending in his statement that he released that the CPP commends the CBN for the successful implementation. I know the last count, that was on Friday, the CBN had released a statement to say that about 30 banks have met the recap, and so CPP counts that as being successful, the implementation of the bank recapitalization program exercise, and points out that the total credit to small and medium enterprises, the SMEs, to the country is alarmingly low. So hopefully, I saw some numbers saying about 4 trillion naira or so has been brought in, new money brought into the sector. So can this money be used for small businesses? The think tank asserts that the ultimate success of this reform will be determined by not just having stronger banks and balance sheet, but the extent to which the system supports investment, SME lending, job creation, and economic transformation. All right, now away from the CBN and the banks now, stakeholders in Nigeria's real estate industry have emphasized the importance of regulatory compliance to ensure sustainable growth and investor confidence in the sector. This comes as the Lagos Chamber of Commerce and Industry engages key players in the real estate sector in discussions focused on improving compliance with existing laws and standards. The 2026 Real Estate Construction and Engineering Sectoral Group Conference of the Lagos Chamber of Commerce and Industry They have gathered industry experts and players to discuss mainstreaming ESG compliance at a time the world is facing economic restructuring defined by emerging growth drivers beyond oil and diversification in energy sources.
There is nothing you want to do today in the real estate space if your business is properly structured that you don't find funding for. There are funds out there that are chasing properly structured organizations and projects that they feel comfortable that, yes, if they put their money, they are sure that the money will deliver what has been promised.
A shift from policy assistance to policy enforcement, from mere professional knowledge to professional accountability, from project completion to life cycle performance, talking about having a reduction in energy consumption, going green.
Speaker after speaker insists that the social dimension of ESG is equally critical in the Nigerian context.
Fortunately for SON, in the Nigerian National Standardization Strategy, we have identified several standards in relation to this area. In fact, I would be happy to tell you that out of over 4,000 standards that are to be worked upon in these 4 years from 2024 to 2027, we have something close to 1,000 standards that are related to ESG compliance.
LCCI believes that the trajectory of the economy's future will be significantly influenced by how infrastructure and urban systems are built, and they say they lead by example.
Institutions have started practicing it. This building you are in on a daily basis is 100% on solar energy.
Globally, environmental, social and governance, that's ESG, is viewed as a strategic lever for transformation. In Nigeria, both the public and private sectors could benefit if required practices are adopted. Well, the secrets revealed that the national single window that went live on Friday, launched 2 days before that, and it promises a breath of fresh air for when it comes to our ports operations. But we will discuss that. First of all, let's see the go live of national single window. The national single window has gone live. The facility located in Apapa, Lagos, the platform is run by Nigeria Customs and promises to be a digital trade gateway that will centralize trade portal, increase transparency and efficiency.
As a layman, or from the layman's perspective, if you are to submit documents through 7 or 10 windows, now things are easier. You can just submit it through a single window. So it will save you the cost, it will save you the energy that you have to move from window A to window number 7, or from window 2 to window number 10. It has also saved you the papers you are going to use, because now it's going to be digitalized.
The first phase, which officially went on live on March 27, 2026, includes application submissions for import licenses, certificates and permits, manifest submission for air and sea cargo, and centralized risk management for agencies.
I'm sure they've been working endlessly before now. They've put in much effort to go live today. For us to go live today means much has been put into it. So, but for every implementation, you should expect some glitches. All we'll say is that the technical teams are on ground. The technical teams are available to resolve every itch. They are going to be very, very reactive so that it could reduce redundancy, and it will also reduce any time lapse. But all we want to say is all the traders should please be sure they are modern traders. They should also train themselves, equip themselves and arm themselves on the use of the system, the use of modern gadgets. And then we also pray that MTN, Glo, and all the networks that are also available to service the application, because that would be a very major challenge that we could be having in Nigeria.
Current participating agencies include Nigeria Customs Service, NAFDAC, Standards Organization of Nigeria, Nigeria Ports Authority, and the Central Bank of Nigeria. Well, let's stay on the national single window now and get to understand more about it and the promises that the government is giving with this. And we're going to be doing that with the director of the national single window, Mr. Tola Fakolade, joins us virtually. Mr. Fakolade, good morning and welcome to the program.
Good morning, Annie.
Great. So let me start off from the last speech there that we heard in the report, talking about training of the personnel, both in-house and the traders. What are you doing to ensure that everyone, or at least almost everyone, would be able to use this new facility?
No, thank you, Annie. Thank you very much. We actually started the training, I think about 6 weeks ago. We'll be running it for 6 weeks. We have 4 locations in Lagos, in Ikeja, in Apapa, Lekki. We have a training location in Port Harcourt, one in Abuja, and one in Kano. So we'll be running that since the 16th of February, and it's still running till date. And this is important. The traders are encouraged to actually go book a seat in the training. These are hands-on training where we actually provide the trainees with laptops so that we can actually walk them through how to navigate, the processes and the architecture of the national single window. So the URL to book the training is booking.nsw.gov.ng.
Could you say that again?
We will continue to train. Sorry, because training...
Could you say that again and say it slowly? Because we have people who would be interested.
Okay. Yes, I'll say that again. So it's booking, which is booking.nsw.gov.ng. So if you go to that URL, you'll be able to book a seat in the training, and then we will, and then on the day of your training, you will participate in the in-person training. I also need to mention that we also have online video tutorials. For those who believe that they can just go through those tutorials and train themselves, we have video tutorials. And to access the video tutorials, you go to training, which is training.nsw.gov.ng. So if you go to that URL, you can actually see video tutorials that are actually very self-explanatory. Yeah.
All right. So, and this promises to remove the hurdles that traders face at our ports, both for imports and exports, correct?
Yes.
All right. And I know that... Okay, go ahead. Go ahead.
No, I just want to mention that, at the port, I will categorize the challenges at the port into 2. One is infrastructure and one is processes. And what the single window tackles are the processes. How do we ensure that our processes are more streamlined, that we eliminate duplication, we eliminate the inefficiencies we have in our processes today? That is the objective of the single window. How do we streamline our processes, ensure our processes are best in class, and that will help to really facilitate trade and the clearance of cargo at the ports.
So, I mean, and I'm glad this is coming at a time where we just signed that deal, with the United Kingdom that's supposed to help in infrastructure. So I guess this should help in processes.
Yes.
And then that should help with infrastructure,
yes.
I believe.
Exactly. Yeah, and, I need to mention that, we just want to really thank Mr. President for his foresight in really ensuring that, our import and export processes are really streamlined. And, this is really going to make Nigeria an even more attractive destination for investment.
All right, Mr. Fakolade, since I'm not an expert in this field, I had to get the opinion of, a player in this field. And some people are cautiously optimistic, about this, because we still have Odogu, be Odogu, that's supposed to also help in something like this. But first of all, let me just take Mrs. Boma Alabi, her views. She's the player, she's the chairperson of Shipping Association of Nigeria. I just want you to hear what she said, and then you can react to it.
Customs need to have the one command for the country. So wherever we are, once we're in Nigeria, we're in Nigeria. We can drop the goods wherever we need to. That single window does not change this logistics situation. It will hopefully make things more efficient if they follow the process they put in place. Because again, speaking for industry, this has been our experience with government agencies. They will say, oh, we're digitalizing, and then we have another layer of red tape. Then you're insisting all those things you sent to us via that window still bring us hard copies. And then you're making voluminous copies and you're taking physical copies to the various agencies. Why are you doing that? Mimasa, my members have been trying to get reconciliations done and the backlog is unbelievable. So it's all very well talking about the single window. You have to train your people. You've got to get them to accept the process and to make it work.
All right, so I wonder how you would react to, she said two things there. The fact that they bring in goods, if your initial destination is Lagos and something happens, you want to divert to Calabar, you can't do that. You have to go back to like China and then come back. And then she did talk about even when we have all of these celebrations around these platforms, it seems the officers there are still determined to get the hard copy. I wonder how you would react. Let's start with that first.
Yeah, so I'll start with with the request that some agencies, even though are digitized, they still request for hard copy, and I think this is just one of the the sensitization and the training that we're doing, not just with the private stakeholders but also with the agencies. The world is going digital, the world is moving into AI, and we need to start moving away from our old ways. Everything has been digitized, so with a single window, we have actually worked with a lot of agencies that actually have manual processes or semi-manual processes, and we fully digitized this. No manual document at the end of the implementation of this project. No manual document will be required, and we've also agreed, to ensure that the single window delivers on its promise. We've also agreed certain service level agreements with the agency. So, how long is the standard time, for the different agencies to approve their permits, to provide the right approvals, and we will also, be tracking those. And the objective really is not to point fingers. I think the objective is for us to really understand, where are the bottlenecks and how can we work together to ensure that we eliminate the bottlenecks. So we are collaborating with all the agencies, Customs, NAFDAC, MPA, as you've mentioned, and we know it's a journey. I will not say that, since single window was launched on Friday, all our issues will be eliminated. We have to start that journey. We have to make people get very used to using digital, digital approvals, digital document versus carrying files from one office to the other. We do not have a choice. The world is becoming digital, and we have to move in that. And it gives us a competitive advantage, like I mentioned in the beginning. It gives the country a competitive advantage when our processes are digitized and streamlined to ensure that it helps to simplify our import and export processes.
All right, so if you could please walk us through a process with the timelines, like how long it's supposed to take. For instance, somebody wants to export agricultural produce, or if it's imports, whichever you think is more relevant at this point. Could you walk us through how it starts and how it ends, and approximately how long it should take?
So I would answer that this way, Indy. Our current processes are based on the data that we know and the analysis we've done. Import and export processes, depending if you are doing it through air cargo or sea, it still takes 2 to 3 weeks. And we have set an ambition, and I like to call it an ambition because it's going to take us some time to get there. But we have set an ambition on how we want to make it a norm that actually within 24 hours, cargoes are out of our port. It's going to take us a while to get there, but we are taking that first step together with all our partner agencies. I know the Nigerian Custom is also working on the 48 hours clearance from the port. So we are all coming together and having this ambition, and then we are holding hands and working through the processes, eliminating the hurdles we have today. We want to go from that 2 to 3 weeks on the average, actually probably closer to 3 weeks on the average, and we want to get to that 24 hours cargo clearance. There are countries that do that today, where in a few hours, cargoes and containers are out of the port, and we want that to be a norm in Nigeria. So to answer your question, it really varies if you are doing air or sea cargo, and it varies by even terminals and ports. But on the average, based on the analysis, today we are at about 2 to 3 weeks, and that is not acceptable because it doesn't make our ports very competitive and very efficient.
And another conversation that was held at the event on Friday was the dependency on telecoms. I mean, I don't think there's a lot we can do about that, but I wonder if there's perhaps alternative plans so that if one network fails, it won't be like our election. You cannot upload results. Is there a concrete plan to buffer against, such situation? Because, I mean, the officer there did mention we should also hope on the telecoms so that this will work.
No, thank you. Thank you, Annie. This is definitely an infrastructure challenge that we have countrywide. However, how we're tackling that as a National Single Window Secretariat, we're actually starting to establish what we call walk-in support centers. We will have walk-in support centers at the major ports across the country. We've established the first one, the one in Apapa, actually where we had the go-live ceremony that you showed earlier. So in these walk-in support centers, actually importers or agents can actually come in. If they don't have internet or they have internet issues, we have computers there. They can use those computers that have internet to complete their import or export processes. And what we're doing is, I think we have about 3 different internet sources there now. There's MTN, I think we have Glow, we have Starlink. So, it's basically trying to, hedge the risk. If one network goes down, we can shift to the other. So I think based on the constraint on, internet infrastructure that we have, that is, how we're trying to support the trading community. They can walk into these support centers and then they can complete their transactions if they are having network issues.
And let's end with the other concern that Ms. Bomalabi shared, which is you have a cargo, you're supposed to land in Lagos, you have an issue, you want it to land perhaps in Calabar, and then the custom is saying it has to go back to China. Before. Is there anything that can be done about this?
Honestly, I'm not very privy to that information, and I don't know if it's a one-off situation. I'm not very privy to that information. What I can tell you, like on the single window, we are working with our partners, which include Nigerian Customs Service, NAFDAC, other agencies. And our objective is we will, start tackling challenges that we have when it comes to import and export processes to be able to get to our ambition, which is a 24 hours clearing. And like we said, we are starting that journey and we are taking that first step right now.
All right, thank you so much. We hope, well, please, let's plead with you. If you can go back and try to help us find out about this and help find a solution, I mean, we would really appreciate that. That's just a plea on behalf of, the stakeholders in the maritime industry. Thank you so much, Mr. Tolafa Kolade, Director of the National Single Window. Congratulations on going live And we hope we're counting down to the 24-hour clearing process.
We'll get there. We'll get there. We're starting the journey, and we will get there. Thank you very much, Amy.
All right, great to have had you on the program. And now let's take a break. When we come back, we talk about gender finance gap. What is Africa losing? That's after the break. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. Let's do a little bit of calculation and find out what Africa is losing. You know, every time we talk about gender equality, and sometimes it seems like it's just a sentimental conversation, but I hear Africa is missing out on some things because of this. First of all, measuring that gap, they said that's the next frontier in Africa's development finance. So if we really want that development we're looking for on the continent, this is where we have to focus. And findings say that across Africa, women are among the most active entrepreneurs in the economy. And yet, when you talk about women at the top or businesses at the top, you don't see a lot of women businesses. Heartbreaking, that is. And they remain significantly underserved by formal financial systems. According to AFDB, women-led businesses across the continent face an estimated $42 billion financing gap. And of course, that limits their ability to scale, to invest, and create jobs. Perhaps that's why we're not seeing big businesses owned by women, even though we see a lot of small businesses started by women. And development finance institutions have launched initiatives to address the challenge. We hear that a whole lot, but how practical it is, I wonder, maybe that's why we're not hearing so much about it. And globally, credit gap for women-owned SMEs, globally, not just Africa now, is between $1.4 and $1.7 trillion. So it's not just an African thing, even though sub-Saharan Africa seems to have the highest burden. Women entrepreneurs in Africa face a significant financing gap, about $42 billion. In Africa, 52% of women have a financial account, compared to 64% of the men. You'd have thought everyone has a financial account now, at least with the fintechs, but not so. Well, in West Africa, only 22% of the women distributors had access to finance. So what are we missing? What are we losing in all of this on the continent? We have joining us for this conversation, Omoboye Odu. She's the head of SME banking at Ecobank, Nigeria. Good morning.
Good morning.
Omoboye, good to have you on the program.
Thank you, Uni. Thank you for having me.
Good to have you. Yeah, and then we keep talking about, we just finished celebrating International Women's Day. Women are, well, Women's Month, all of that, Mothering Sunday, and all of that. And yet, when we get to the top, even in the 9 to 5, the higher you get on the ladder, the lower number of women you see. But at the bottom, you see more women. So it seems to be a global thing, but of course, it's more pronounced in Africa, sub-Saharan Africa. What are we missing? What is Africa losing by not empowering women as much as the men?
Thank you very much, and that is indeed a great question. I think you've pointed out the fact that the financing gap in Africa is $42 billion for women. Now, the truth is that women are more than just a gender. They're lifestyle, their life support system for everybody, the whole economy at large. There's a saying that goes that you support a woman, you support a family, you support a community, you support a village. The truth is that historically, financial systems are built to support male-denominated industries and have struggled to understand how to support women businesses. And the beauty about it is that people have noticed this. There's an intentionality around changing this narrative and ensuring that the right systems are in place to support women-owned businesses. And I heard you mention the fact that even climbing up the corporate ladder is you struggle on this side of the world to see many women at the top. I think you'll be pleased to know that that is changing gradually. It's starting to change.
Don't you see that in the banks?
You see that in the financial industry. There's more women at the top. There's women CEOs. There's women directors. At the bank where I work, Ecobank, our board is 40% women. You know, it's the first time in a long time that's happening. Even senior management now is over 40% women. So there's an intentionality around changing that gender empowerment narrative. especially in the financial sector. But yes, you're right, Africa is missing out because it's a well-known fact. Data shows it that women are actually better creditors. Women are better business managers. So while the men are more risk-prone, women tend to be more risk-adverse, we're losing out as a continent because we're not supporting the whole gender. We're supporting just part of it. So I guess your next question will be, how do we change that? What do we do? A number of programs exist. There's a lot of DFI support, both African and non-African. But at Ecobank, for example, we have our gender proposition for women, which is called Elevate, pardon me. And it's an intentional program in line with what everybody is doing to ensure that women are well supported to get the right access to what is missing.
So we have programs by banks. I mean, everybody is telling us, but what about the impact? We've been having these programs for a number of years now. Why are we still recording the gap if these programs are effective? Perhaps there are some things that the financial institutions are missing out.
So I guess there's been so many programs, but perhaps it's not the right program. So the difference between a man and a woman-owned business is, for example, like I said, men are more risk-prone. A man will say, look, I need $1 billion Naira, I'll speak to anybody. A woman's like, $1 billion Naira, oh my God, that number's so scary. Let me ask my family and friends. I will start with 10 million, I will grow gradually. So it slows down our ability to scale very quickly. So you need a program that understands how women invest, how women transact, how women own businesses. A program that understands how you can help that woman scale, give her the right capacity, give her the right data nodal so that she can be financeable by the big institutions.
Well, we have a lot of women now, as you noted. We have a lot of women in the financial institutions now. Are they not bringing that perspective to the table?
So those programs have started to exist now, and they're much more newer than the traditional programs. So they're programs that offer financing to women that don't demand traditional collateral like your land or fixed assets. They're programs that offer you networking. They offer you mentoring. They offer you data visibility. Now, the average women business, like you said, is small. It's informal. For financial institutions, we're looking for data to lend to people. So the average woman may not have financials to show the business. So what you need is a digital solution that allows us monitor your financial capabilities, and we can now say, yes, this woman is lendable. Historically, the programs we've had have not addressed those gaps. There are programs that just go, look, I want to help a woman in banking, come and access X amount of finance. It's not just about finance, it's a whole ecosystem. It's how do I help you build capacity? How do I help you ensure that you have financials to show the lending partner you want to work with? How do I give you access to mentoring? How do I give you access to new markets, to networks, to cross-border trade?
So how is the adoption and reaction on the other side by the women?
Okay, if I may speak about the institution I work with, for example, we started this program.
But you're not allowed to advertise.
I'm not advertising, but just to mention, we started this program honestly about 3-4 years ago. Yet, from inception, we've done almost $1 billion in financing to women. We've helped over 203,000 businesses owned or led by women, and it continues. The growth last year was 194%.
So how's the attitude of the women?
It's changing. It's a gradual change. But with everything that
when you say it's changing, is it responsiveness, management of it, attendance of the training? I just want to understand.
Okay. So let me break it down.
Yeah.
So in terms of, let's say we started from ground zero. Now we're starting to address women in terms of capacity building. The first year was a handful. By the next year, it grew by 50%. By last year, we've grown by 194%.
Who are these women? Where are they? Rural?
They are across the continent.
Do you have the educated?
So it's a mix.
Okay.
So we are looking to improve financial inclusion across Africa. We want Africans to have the same kind of banking ratios that Teledensity offers, which is 100% more or less in Nigeria. And you did say that even in West Africa, women banking is less than 40%. It's intentional. So we have to go also to the grassroots as well as the urban areas. So it cuts across the full spectrum. There is something for women in the grassroots, the informal sector. There's something for women in the urban areas. So we're looking for the solution that addresses every skill gap you find in women in banking, and women are also not in banking. So it's intentional. It is to drive impact, and not just to build that women banking agenda, but also to change our narrative as a continent, as a country. Like I said, if you help a woman, you don't just help a family, you help a whole village, a whole community. And that is the intention behind the program that we've put forward. So it's everybody.
So we're making progress?
We're making
as a continent?
As a continent, we're making progress. As a country, we're making progress. They say little drops make an ocean. And thankfully, the drops have moved from little to large buckets. We are making progress, very measurable progress. To drill down into where we are, I said we've done about roughly under $1 billion since we started about 4 years ago. Nigeria has done about 10% of that and growing. And the beauty of this thing is, one, you're not asking for traditional collateral that,
So what kind of collateral do you ask for?
It's very flexible. There's grants of up to $50,000 collateral free, but it's very flexible for women-owned businesses. Typically, a lot of banks don't like to lend to startups or finance startups because of the different issues. For gender programs like this one, it is relaxed. The requirement is not as steep as your traditional bank, which says 3 years or 4 more business. It is much more relaxed. So the intention is to make it easier for women-owned businesses to get access to the support that they need to scale those businesses.
And I learned you guys look more the way of cooperative now. So it's like members of the cooperative are shorties to members or something like that.
That also works. It's like if you're in a cooperative, it works. You're not a cooperative. It's your business model. It's not a one-size-fits-all. Women don't work in a straight list. What works for one woman doesn't work for the next woman. So what we're trying to do is understand your business, provide the right support that you need for your particular business. What works for Agatha may not work for Christy.
But doesn't this increase the risk of bad debts?
So, interestingly, the statistics show that women are better debtors than the other sex. Women are more responsible in handling debt. Women are, I think it's a guilty part in the fact that taking from someone, I want to return it. So you find that in comparison to lending to the other bucket, it's not as risky. So the answer is no, it doesn't. The onus is on the banking institution to do your homework well, do your due diligence, and ensure you understand the business. If I understand your business, understand your cash flows, I wouldn't increase bad debt. I understand how to build a financing structure that works towards your own cash flow.
All right, well, I'm happy you said that we're making progress, and certainly we hope that the continent will feel the impact of empowering women.
I think the truth is that all of us have to come together to understand what we need. It is not traditional financial solutions. You need to understand how the business for women works. And if we all come together and are speaking from the same narrative, this 42 billion gap will become next to nothing in no time. The funding is available. It's just targeting it to the right sources to ensure that they have access to it.
All right, thank you so much for your time. Omoboye Odu, the head of SME Banking at Ecobank Nigeria.
Thank you very much, Eni. Thank you.
Let's take a break. When we come back, we'll go global. Please stay with us.
Thank you, Eni. Is it good?
All right, let's get a check on what's playing out in global space now. Global markets are bracing for a high-impact week of economic data and central bank signals that could shape the near-term direction of interest rates and investor sentiment. All eyes kick off today with remarks from Federal Reserve Chair Jerome Powell. As markets look for clues on the policy path on Tuesday, that brings latest job opening reports, offering insight into labor demand, followed by key purchasing managers index. That's coming definitely from most of the global countries there for PMIs, showing what to expect with how much the producers are paying to produce most of those goods, and might see the clues there on what's played out in March with rising energy prices. Then on Thursday, unemployment claims, that's in the U.S. Investors will be watching out for that. So many employment data, coming this week in the U.S. Then for Friday, we have non-farm, payroll. So definitely it's a packed week, but investors will be watching out for what Fed Chair Jerome Powell will have to say today. And definitely we're looking out for that, and we'll get you sound bites, later on. All right, let's get a check on what's playing out in the UK. We've seen rising energy prices also, rattling citizens right there. Joining me now to unpack what's playing out and what to expect this week, we have Juliana Olayinka as a London Bureau Chief. Great to have you on the show, Juliana. Good morning.
Good morning, Laddie.
So, Juliana, first off, before we get into other matters, are you feeling the squeeze at the pumps in the UK?
Honestly, I think we're all starting to feel it, even if you can't feel it now forensically, because we know a lot of this data is all vision driven. I think, you can actually feel the nerves from the markets and from the ministers. So yes, I think it's going to be a very decisive week here in the UK.
Right, I'm talking about the minister. Seems she's going to be quite busy today. That's talking about Rachel Reeves. She's expected to tell G7 to accelerate shift to clean energy. What are you hearing about that?
Yeah, it's going to be pretty interesting. We know that the Chancellor, who's been pretty embattled over the past couple of weeks, she's set to join an emergency virtual meeting of G7 finance ministers, energy ministers, and central bank governors at about lunchtime today. And this is basically about the Middle East conflict, which is dominating all headlines across the world. Now, the focus, as you said, is possibly about the transition, but mostly about how the G7 can stabilize energy supply, manage rising prices, and prevent further disruption to global markets. Now, quite interestingly, Sir Keir Starmer is on television now, on UK television. He's just launched local elections, basically telling Brits that we're not going to be dragged into this war, which is why he had the spat with Donald Trump to begin with. But everybody's basically dragged into this now, right, because of what's happening in the Strait of Hormuz. And I think what Rachel Reeves wants to do is kind of preempt what we had 4 or 5 years ago, when once again energy supply was huge. Energy became an economic issue because of the war in Ukraine, and we're seeing that now with the prices of a barrel of Brent crude. Now, once the Prime Minister finishes in the West Midlands, he's also going to be heading back down to Downing Street, where he's convening a meeting with senior leaders from Shell, BP, Lloyds. This is covering insurance, shipping, banking and energy, basically to try and coordinate some contingency planning to avoid issues pertaining around the Strait of Hormuz, which is, as I said, making the price of Brent crude about $110 per barrel. So even though this is a regional issue, this is clearly global. And so I think Rachel Reeves is going into this energy meeting today, hoping that she can come out with some sort of contingency plan that the G7 can all agree on, so that, these shocking price rises we're expecting to see, that is infecting inflation, won't harm consumers too much.
Right. Everyone's looking out for inflation data for March, expecting it to be quite, dramatic at this point. We'll definitely keep checking all of them. But what are we expecting on the data front in the UK this week that could actually move markets?
Well, I suppose that the main focus this week is going to be what happens with troops on the ground in Iran. We've had heightened rhetoric, haven't we, from Donald Trump over the past couple of weeks. It seems to, he keeps shifting the needle every time he opens his mouth in the Oval Office. A couple of days ago, he was talking about some sort of peace plan. Now he's sending troops on the ground, and he says he wants more oil. He wants Iran's oil. So I think the markets are clearly going to be focused on that. It is Easter holiday in the UK. The children are off. Parliament is in recess. Local elections, campaigns have been kicked off. I think, Sir Keir Starmer is going to be walking a very tight rope. He doesn't want the focus to be on what's happening miles and miles away. But of course, this is definitely affecting us at the price of the petrol pump and how much it's costing us to, heat our homes and also put food on our table. So all markets, all data are very much focused around the Strait of Hormuz at the moment.
Right. Everyone, those that want to enjoy the holiday, also looking forward to Easter at this point. Thank you so much, Juliana.
Thanks, Laddie.
All right, to the global trade now. We're seeing negotiations have hit a major roadblock as talks at the World Trade Organization ended stalemate over rules, governing digital commerce. Disagreements between major economies, including the United States and key developing nations, prevented any extension of a long-standing moratorium on tariff for e-commerce, raising fresh uncertainty for global digital trade. The deadlock underscores deeper divisions within the WTO and casts doubt on its ability to deliver reforms, as negotiations are now set to continue in Geneva amid growing pressure on the global trading system. And Cuba's deepening energy crisis is now at the center of a widening geopolitical standoff as U.S. President Donald Trump faces mounting pressure over a controversial fuel blockade on the island. The move aimed at squeezing Havana's government has triggered widespread blackouts and economic disruption, even as a Russian oil tanker heads towards Cuba, testing Washington's resolve. The situation is further complicated by global energy tensions linked to disruptions in the Strait of Hormuz, raising concerns that the crisis could spill over into broader oil markets and intensify geopolitical rivalries. And to pharmaceuticals now, see U.S. pharma giants Eli Lilly is deepening its push into artificial intelligence, signing a drug discovery partnership worth about $2.75 billion with biotech firm Insilico Medicine. The deal gives Lilly exclusive global rights to develop and commercialize a pipeline of AI-designed oral therapies, with Insilico receiving an upfront payment and additional milestone-based incentives. The agreement underscores a growing industry shift towards AI-powered research as major drug makers race to cut costs, speed up developments, and unlock new treatments in an increasingly competitive pharmaceutical landscape. And those are the top stories right there in the global space. I'll hand things back over to Ini.
Thank you so much, Ladi. And just before we go, we'll see what's going on in early trade in Nigeria's local bourse. The market is in the red at this time. It's down 0.16%, but still holding forth to that 200,000 level. First Holdco, Wema Bank, Jaiz Bank, they're the most active when it comes to profit taking, as well as Geregu, still losing some of those trade price. Okumu Oil is also down. Total Nigeria also down. On the flip side, we have Airtel, Darcom, UH Rate, and Multiverse. Those are the cherry-picking shares that investors are looking at. At this time, at 1:30, Ladi Williams will be back to give you updates from the market and other business conversation, especially you want to put your eyes on what's going on with oil and the metals. I'm John Mekwa, wishing you the best of the rest of your day. Bye-bye.